Hey traders, how to trade top-down analysis. In this short video, I will teach you the basics of top-down analysis, and then I will share with you a very nice example. Please don't forget to like this video and subscribe to my trading view page. So let's start with the basics, traders. When we trade top-down analysis, we always start with higher time frames. Analyzing higher time frames, our task is to identify key levels. Our task is to execute the so-called structure analysis first. So imagining that here we analyze the daily time frame. Here our task is to identify key levels, the points from where it will be safe for us to trade. The second task is to identify the market trend. Yes, here we can see that the market is trading in a bearish trend. And the zones, the areas that is plotted right here, will be very safe for us to catch this bearish trend, right? So let me say that again. On higher time frames, two tasks to do. First of all, to identify key levels and then to identify a current market trend. What is next? Then once you identified key levels, once you identified the zones from where to trade, your task is to patiently wait for the test of one of these structures. Yes? And once one of the structures is reached, remember that you never blindly trade from there. Once the market is approaching some key structure, your task then will be to look for some confirmation. Yes, your task will be to look for some confirmation on lower time frames. But what exactly is confirmation? Imagine that once the price reached the structure, we opened intraday time frame. For example, a 4-hour chart. There, our task will be to look for some reversal path. Yes, analyzing the price action there, we should look for some bearish pattern. And moreover, what we will look for there on intraday time frames, we will look for some minor structure breakout. Yes, the main trigger for us is the violation of the so-called neckline of a reversal pattern. Why the breakout is so important? Because the breakout shows you the willingness of sellers to sell the market and the willingness of buyers to buy if we see a bullish breakout. If analyzing the reaction of the price to a key resistance, we see a bearish breakout of a minor structure in intraday time frames. It just tells you how strong is the bearish pressure from the structure that you spotted. And then once you see that breakout, that is your exact confirmation to open a trading position. Then, preferably on a retest, you open your trading position. You set your stop loss above the highs of the pattern strictly, and you expect a bearish continuation to current lows. Yes, so I hope you got the point, traders. We analyzed the structure and key levels on higher time frames, and then in intraday time frames, we were looking for some confirmation, the proof of the strength of the structure that we spotted. Now let's discuss the example. I wanted to briefly discuss with you the example on New Zealand dollar pair. Let me show you what I spotted right here. On the New Zealand dollar pair, we are trading in a long-term bearish trend. Yes, and recently the market started a correctional movement. And here, analyzing the structure, you can see here we got a very strong support. You can see how nice that the price was respecting that support. And you can see that then a strong bearish movement started and the price violated that support to the downside. And of course, according to all rules, that support turned into resistance. And you can see that then the market was trading on that structure. The market was coiling within that structure. And being top-down traders, our task was to look for some confirmation there. So analyzing the 4-hour time frame, let me show you what I spotted right here. Let's remove everything and concentrate on the price action. You can see that right here. We got a very nice horizontal trading range. Yes, the market was coiling within that range for some time. Yes, we got a very strong support right here, a very strong resistance. And with this high momentum bearish candle, the price broke and closed below the support of the range. That is the exact confirmation, traders. That gives you the proof that sellers are willing to sell, that they are willing to break the structure. And then you open your short position. Yeah, and then you open your short position on the retest, you set your stop loss above the highs of the pattern, and you are aiming at the current level. Yes, that will be your initial target. And because the market is trading in a long-term bearish trend, that will be just the first target. And of course, the market then can go much, much, much lower. So returning back to our drawings, traders, top-down analysis is a very, very, very efficient way to trade financial markets. Yeah, analyzing the multiple time frames, you look for the confirmation of the strength of the structure that you spotted, and that dramatically increases the chances that you will cash out on the trade. Let me know, traders, what do you want to learn in the next video? Also, traders, please like this video and subscribe to my trading page.